Hi, this is Scott Schubert, and you might have heard that in the last couple of months there have been several world events that have had sudden, seeming chaotic impact on the currency markets. Intervention from the Swiss National Bank caused a huge 1,000 pip movement within about an hour, and all kinds of issues with the European Union, the European Central Bank, and people are wondering whether the euro is even going to survive as a currency. All kinds of world events affect the Forex currency market, and many traders are terrified of trading this market, and even many professional fund managers and professional traders around the world are completely baffled and are putting out terrible results with the capital that is entrusted to them. And yet in our trading community we have seen some outstanding, phenomenal results from some traders who have very little experience and who have been learning to trade a very short period of time. Let me just show you what we've been doing in the last month, and in the next video I make, I'll show you an example of one of the next trades that we intend to take in advance so that you can see the trade setup before it happens. Now, these are all the trades that we've taken so far within the last month, starting on November the 25th. I'm going to show you every trade we took, and there's a total of 14 trades. And all of these trades were entered live in our daily trading sessions. And some of the traders in our community got better results than what I'm about to show you, because this is not about me telling you to get into a trade, but this has always been about you developing your own power and skill as a trader to make your own trading decisions. And some of the traders in our community have had results that are even far beyond what I got, what I'm about to show you on these 14 trades. Here's a trade that we entered on the Aussie versus the US dollar. We entered on November the 25th at a price of 97.50. Now, it's very interesting why we chose to enter a trade long right at this point on a Friday, and why we had just closed a short position right at this point, right near the very bottom. If you're familiar with this price action that has recently happened on the Aussie, we closed a short position at this time. Why did we choose to close the previous trade? And why was it that we chose to go long right after that on the same day on a Friday and leave it running, and then, as it turns out, the market gapped up in our favor the following Monday? We exited that trade on November 29th at 99.55 for a total of 205 pips on that trade. We didn't enter before or after that. We didn't exit before or after that. But those are the points where we specifically chose to enter and exit. We entered again on November the 29th at 99.99. In this case, we exited right after that at 10005 on 11/29 the same day for a total of 6 pips. And you're going to see that as you develop this skill, you are responding to what happens as it's in the process of happening. And that's why we're able to trade in a market where things are often uncertain and there are more than one possibility for what's about to happen. Here we entered again and went short on the Aussie at 102.62 on December the 2nd. We chose to exit that trade at 101.89 on December the 6th for a total of 73 pips profit. Not bad in a sideways moving market, because we chose specific points for specific reasons, using a strategy that for us tends to be highly reliable. Then here, for a very specific reason, we chose to enter again on this pair and go long at 102.07 on December the 6th. We exited that trade on December the 7th at 102.38 for a total of 31 pips. Now, if you look back at what has happened, we haven't really missed any decent opportunities, and we've gotten just about all you can get from this market for another very specific reason. We chose to enter this pair right at the price of 1.0239, and then we chose to exit that trade at 1.0095 on December the 12th. Some of the traders in our community ended up not exiting at that point and re-entering at another point after that, and there are several traders in our community who got much more than this. But on this specific trade, it was a total of 144 pips profit. Some of the traders were still short at this point, which happened to be the very bottom, where we also chose to enter and go long at 98.96 on December the 15th. What were you doing at that time? Were you thinking about doing the same thing that we were doing at that point in time? Because we entered right at that point, almost near the very bottom, and we chose to go long at 98.96, and there are some very specific reasons why we did that. We exited that trade on December the 16th at 99.81 for a total of 85 pips. On the pound Swiss, on December the 8th, we entered at 1.4501 and went short. We exited that trade at 1.4530 on December the 8th, and in that case, it was a 29 pip loss. Here we entered on the pound yen and went short right at this point at 12200 on December the 5th. On a somewhat chaotic pair in a somewhat uncertain market, we were able to choose this very specific point at 121.47 on December the 6th to exit that trade with 53 pips profit. Remember that past performance does not guarantee future results. There's considerable risk in trading Forex, and be sure you read all risk disclosures. Don't even trade Forex with a live account if you don't understand the risk that's involved. On the US dollar Canadian, we chose to enter and go short at 1.04414 on November the 25th. There is a very specific reason why we chose that point. And then we exited that trade at 1.03125 on November the 29th for a total of 128 pips. On the Canadian, we entered again on December the 5th at 1.0156. Went long. We decided to exit that trade on December the 6th at 1.0186 for 30 pips profit. Pretty much got what was available to get at that time. If you've been looking at this pair and you know what it looks like in the big picture across a range of time frames, it's quite remarkable what we were able to do during this time. Well, here we chose to enter at 1.0173 and go short on December the 6th. For some reason, we chose to exit that trade at 1.0125 on December the 7th for a total of 48 pips. This is almost right at the bottom for this pair for that period of time. Here's what that looked like from a little bit longer time frame. And why was it that we chose to go long right at that time on a Friday, I think it was, and leave the trade running? Well, here's what it looked like on the 1 hour. We entered on December the 8th at 1.0150. Exited over here on December the 14th at 1.0365 for a total of 215 pips. If you've ever been involved in trading a financial market and you see what it is that we've been doing here, and if you could see why it is that we're doing that, you will be completely amazed at the profound, revolutionary, powerful breakthrough and insights that you are going to have when you see and experience this. Because if you've ever been involved in trading, you know that this is just not what people tend to do. And it's so important why we don't enter at other times and why we do choose to enter at very specific times. Also why we don't exit at certain times, and why we choose to exit for very specific reasons at certain times for certain phenomenon that we are able to see. On December the 1st, we entered on the US dollar versus the Swiss at 91.02. We exited that trade at 91.91 on December the 5th for 89 pips profit. Now here's a trade where we entered on the Swiss, went short on December the 8th at 92.29. And we exited that trade at 92.70 on December the 8th. And in this case, it was 41 pips loss. So the total pips on the positive trades during this period of time from November the 25th to December the 16th, 2011 was 1,107 pips. The total pips on negative trades from that same period of time was 70 pips. The total net pips gain then, with including all the losses, was 1,037 pips. These results are not necessarily typical. Typical results are for people to lose and give up. This is just an example of the trades that I entered during our live trading sessions over this period of time. Now, each trader enters and exits at different times and at different prices, and all traders make their own trading decisions and all get different results. For me, this is a very reasonable and conservative approach to trading, and the gentleman that I interviewed last week was getting about that much, sometimes in a week, and reported that he had gotten over 1,000 pips in 1 week 4 times within the last 2 or 3 months. To find out how you can participate in these live trading sessions for free for an entire 12-month period of time, go to forextradingseminar.com. And then you can look over my shoulder and steal these trades from me while you're learning to actually develop your own skill to do it yourself.